Welcome to our daily Forex market analysis, and this is for trading on February the 21st, 2020. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. All right, as usual, we'll get started with our calendar here. In terms of the news that we saw come out today, we had the ECB monetary policy meeting minutes, and coming up actually in a little bit here, we have Japanese all industries activity here. Overall in the market, we have, at this moment, we have the virus issue, the coronavirus issues kind of resurfacing again. And we have been hearing also from Kuroda here from Japan that they are likely to see supply chain issues. So just keep that in mind. Once we see the virus issues resurface, that is negative for the equities market. But Japan here, we've got some interesting stuff going on. With Japanese yen, we saw negative data that had come out, GDP numbers that came out as negative, and the drop was substantial, and that's why we have seen Japanese yen getting killed in the market right now. All the yen crosses have gone up because Japanese yen is really weak at the moment. And again, the biggest driver behind that is the negative numbers that came in. The drop was substantial, and it was just quarterly numbers. So, but it was much bigger than what was expected. And now with the concerns around coronavirus, because the problem is more concentrated in Asia and Japan. So the concern is that the virus is spreading from China to Hong Kong, Singapore, and in the Asian countries, and that's why Japan is at a higher risk of impact from coronavirus compared to Western countries. So that's something to keep in mind if we see more concerns. So here we are seeing that Bank of Japan, Kuroda is saying that there will be problems as a result of coronavirus that is negative for Japanese yen. So overall, right now, Japanese yen is getting killed because of all these different reasons coming together. Now, coming up on Friday here, we have a ton of data, so do expect some volatility in the market here. We have seen, or we are going to get a lot of PMI numbers. So PMI is Purchasing Managers Index. This is a leading indicator, and the reason this is so important is because if the purchasing managers are buying more stuff, that means they expect the economy to do well. And that's why they are buying more, and then that means the retail sales are expected to be higher, and the GDP is expected to be higher. So PMI numbers lead into all those different things. So with the PMI numbers, if we see that the numbers come in below expectations, that is likely to be a negative for euro. Euro is already getting hit right now. So the focus seems to be shifting from Japanese yen to euro. So yen has always been the funding currency because of the low interest rate. So people, when the markets are doing really well, like we have seen recently, when the equity markets are doing really well, most investors will borrow money in Japanese yen, and then, or they will borrow money, from the yen, and then they take that money and invest it into higher yielding markets, so equity markets, and that's why the yen does poorly when the risk on environment shows up, which we've been seeing. That means the equities go up because investors expect a higher return from the equity. So that's what we have been seeing recently. But today we saw that gold and silver went up, equities went down, but Japanese yen went down as well. So there's that broken relationship that we generally see Japanese yen go up with other safe haven assets. And right now we're not seeing that because of the negative numbers that came out for Japan. And now if there are more issues with the coronavirus, that will just be negative. So just keep that in mind. So if PMI numbers here come in below expectations for euro is likely to take more of a hit as a result of that. So euro is becoming more of a funding currency now because the interest rates are zero compared to other countries. So money is flowing from euro to US, which has higher interest rates, as well as equity markets are doing well there. So that's the overall state of what's going on. And I guess I should do a video on this as well, a separate video on risk on, risk off environment. But anyway, so that's what we have going on. So PMI numbers here will be important for euro tomorrow. If they are below expectations, expect a further drop in euro. And then we have PMI numbers for British pound as well. Same thing here. If we see a drop here, that will be negative for British pound. But the services number here is more important than the manufacturing number because UK is more of a service-based economy. And last time we saw a positive number here. So if we see a positive number again, that will be positive for British pound. And then we have CPI numbers here for the Eurozone here. And again, if they are below expectations, that will be negative for the euro or vice versa. And then we have Canadian retail sales numbers here. This is very important if the numbers are positive. So lately we have seen some positive numbers from Canada. So if we get retail sales numbers positive as well, that will be better. That will be good for Canadian dollar, and we're likely to see Canadian dollar go up. And then we have PMI numbers for the US as well. So same thing here, US has done quite well recently. And if the numbers are in line with expectations, we can see the US dollar go up even further. Now, having said all of that, keep in mind that we can see reversals on Friday. So just keep an eye on things. So if a lot of times we see that if the trend has been one way over the course of the week, it can turn around on Friday. So that's something to just be mindful of as we are trading. It's not always the case. But it tends to happen quite often, so we have to be careful about that. All right, so let's go on to our charts now. So we'll start off with the euro dollar. Yesterday, we had talked about how as long as price stays below 1.0820, we were looking for a drop. We got that. Price is all the way into support here. And let's zoom out a bit here. So in terms of our, let's see if you can see that on the daily here, but in terms of the pullback here, I'm just trying to see where the pullback may come to. So in terms of the pullback, we could get a pullback into 1.0800 level here. So bias is bearish here, and I'm looking for a drop. Potential pullback level here would be 1.0800, and then looking for a drop here for euro dollar. Target is 1.0720. So bias is bearish. Our first target was hit today, which was 1.0780. And now the next target is 1.0720 for euro dollar. So bearish bias here. Pound dollar, we were looking for a drop. We did get that. Prices into support now. It did try to break below the support. It has pulled back since then, but bias is still to the downside. And in terms of a pullback, I'm looking at 1.2900. So bias here is bearish, and I'm looking for a further drop back into this support here. Now, of course, we have PMI numbers coming out, which are important and which can change things. But overall bias here is bearish. Target is 1.2820 as the first target. And then if we see a drop beyond that, we're looking at 1.2780. So bearish bias here for pound dollar. Aussie dollar here, we saw a big drop in Aussie dollar. It went right into our target of 0.6600 that we've been talking about for a few days now, but bearish bias still. And in terms of a target, let's take a peek here. We are into, again, lows that we haven't seen for a number of years now. So here we are looking at 0.6520, and then below that we are looking at 0.6420. So bias is bearish here for Aussie dollar, and I'm looking for a further drop. Actually, I forgot to look at pullback levels, so let's take a look here again. In terms of pullback level, okay, so let's see what that is. Okay, so pullback level, we could get a pullback into 0.6640, so keep that in mind. But overall bias here is bearish, and we could see a further drop here. So bias is bearish for Aussie dollar. New Zealand dollar here, this one as well. We talked about how if price breaks through the support here, we're looking for the next level. It went right into our target there at 0.6320. So bias is bearish. In terms of a pullback, I would look at 0.6360 as a potential pullback level. And then I would look for a further drop here. So bias is bearish. First target here is 0.6280 and then 0.6250. So bias is bearish for New Zealand dollar. Dollar CAD here, this one has been going back and forth. Price turned around here. We have a big bullish candle close. So bias here is neutral here because it's still stuck in this range. This is where price has been trading for the entire week here and still stuck at this level. So in terms of the price moves, what I would look for is the high of the range here. If price holds below 1.3270, we're likely to see a move back down towards our support level at 1.3220. So right now, bias is neutral for dollar CAD. All right, let's move on to our commodities now. So in terms of silver, we see that price has not been able to go through the resistance level here. We are stuck at the resistance of 18.45, and price has been holding below that. So we do have a bearish candle close here, which means price could drop. So bias here is to the downside. And what I would look for is a retest of the high. If price holds below 18.50, I am looking for a drop here. Because the bias is to the downside. Now, if it goes through here, it is very likely it will continue on into 18.70. So for now, bias is bearish, but the critical level will be 18.50. And if we start hearing more negative stuff in regards to the coronavirus and stuff like that, that will be negative, and we could see a move higher in the in gold and silver and safe haven assets. So just keep that in mind for now. Bias is bearish for silver here. Gold here, gold has gone up. This one has been bullish. And in regards to our target, now we are at levels that we haven't seen for some time. So in regards to the target, so bias is bullish first of all, and next target is 16.38. And then we're looking at 16.48 to 16.50. So bias here is bullish for gold. Now, it is into resistance, so if price doesn't go through this, it can drop. But for now, bias is bullish here for gold. But do keep in mind, because price is into resistance, if it holds below 1622, it can drop. Oil here, we did see a nice bullish move right into our first target, or just above our first target here, but there's a large pin now, which means bias is bearish here. In terms of a pullback, I will look at 54 as a potential pullback level, or even into 54.30. And then I am looking for a drop. So this is the type of move I would watch out for. Target is 53 as the first target, and second target here is 52.20. So bearish bias for oil. Copper here, it held below this resistance level that it's been struggling with for a number of days. So bias is bearish. Now it is into support. It's been stuck in this range here for a bit. So we have to be careful with this one, because if it holds above 2.54, this one can go higher back towards the high of the range. So that will be the caution. But if we see a break through the support, next target is 2.52 and then 2.51. But again, this has been trading in this range for a number of days now, over a week now. And if it holds above 2.54, we're likely to see a move higher, because last two times that price was in at this level, it wasn't able to break it. And when that happens, price can move higher. But for now, bias is still bearish, so we'll have to see how price reacts. Our first pullback level here is 2.55, or it could go higher into 2.56 and then drop. So overall bias is bearish. We just need to see a break through the support. So bearish bias here for copper. Bitcoin here. Bitcoin has been holding its own. Bias today is completely neutral. Price wasn't able to drop through the support. It tried, but bounced back up. So at this point, what I'm looking for would be a retest of the support and then a further move to the upside. As long as it holds above, we're likely to see a move higher. But this is an important support resistance level. So if it does break through, there is room to the downside towards 9050. So for now, bias is neutral for Bitcoin. Okay, let's take a look at equities now. We actually saw a drop in equities. Yesterday, we talked about how if price does not break through the resistance, because it struggled with this level for a bit, we're likely to see a drop. So we got that right into our target at 33.50. Now, bias is bearish. It did bounce off of this level, but there's still bearishness in this candle. So I'm looking for a further drop towards 33.20. However, if it manages to hold above 33.50, it can still go back up, because overall, there's been a lot of positive sentiment in the equities markets. And with the US, we did see that President Trump pardoned a few people who were involved in securities frauds and that type of stuff. So this basically gives confidence to Wall Street that that the rules are not as strict as they were in President Obama's era. So overall, the regulation, President Trump has been deregulating the industry overall. So there's less overall regulations to hold things down. And with that, that is positive for the equities market. So keep that in mind. So bias right now is bearish, but like I said, because overall move has been for months now is been to the upside. So general trend is still bullish, but within that I will look for a pullback. 33.50 is the first target and 33.20, but if it holds above 33.50, again we are going up. So there's huge sentiment to the upside for now. Okay, Nasdaq here, we did see a drop here as well. Again, so bias is bearish, but like we see here, same thing here for this one as well. Prices into support, it bounced off of that support because overall, again, as we can see here, huge positive sentiment in the market. So overall sentiment is just so bullish that market just disregards all the little blips and continues on. So that can happen again. So that's something that we have to be careful about. But should price break through the support at 95.00, I would look for a drop towards 93.80. So bias is bearish, but again, with caution here as well. All right, then we have Dow Jones here. We saw a drop in this one as well. Same thing though, price pushed off of this level here. So bias is bearish, but again, if it holds above 28,900, then chances are quite high that we will see another move to the upside. But with this one, as we can see, it has been stuck in a bit of a range here. This is the range it's been trading in, and it's right into support. This is where price had bounced off. So if it holds above 28,900, chances are it will go higher. But for now, I'm looking for a retest of that level. And if for some reason it breaks through the support level, next level we are looking at is 28,730. So for now, bias is bearish for Dow Jones. DAX here, DAX has been stuck in this range for the last several days, just over a week here. Price went into the resistance, didn't go through, and has moved back, and now we are into the support. As we can see, last 2-3 times price was at this level, it bounced off and went higher, and we saw that happen today as well. So the bias here is neutral for DAX. What I'm looking for is a potential retest of 13,600, and if it holds above, then looking for a move back towards the top of the range at 13,800. So bias right now is neutral. If it breaks through the support, then the next level would be 13,450. But until then, we are range bound at this point. All right, FTSE here. FTSE has also been trading in this range. It is into resistance, and this is the larger range it has been trading in. And with this one, what I would look for would be 74.80. So if price holds below 74.80, then I'm looking for a drop. So we could see price drop from there back into support level at 73.85. On the flip side, though, if it goes through, then we are looking for a further move towards 75.30. Today's candle closes neutral here, so it can go in either direction. So bias is neutral for FTSE as well. Last but not least here, we are looking at Nikkei. Nikkei, we did see bearish bias for this one. Now we have had a pullback into our resistance already. So as long as it holds below 23,580, I would look for a drop. First target is of course 23,400. And once it goes through, next target is 23,100. So bias is bearish for Nikkei at the moment. So that's it for today. You guys have a wonderful trading day, and I will see you on Sunday for our weekly analysis. Bye for now.